Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 on Monday, July the 29th, 2024. The market basically traded inside of what I call like a little bit of a box, even though it did a very nice decline this morning and then quickly just ran itself back up. I'm going to start with the S&P 500. I'm on the hourly chart. And thus far, no changes to make to the structure the way I've labeled it thus far. I still am looking at this as the minute wave A of minor wave 4, which leaves this in the B wave position. Now, I also am leaving open the potential or the possibility that the market will not necessarily do within the B wave. And then that's the case, I need to shift this 3 down, the 4 up, and the 5 would get moved over because it would suggest that we were in the 4 and are still in either a 4th wave, right? Put the 3 and the 4, and then we're in the 5th wave down, or that we're still within the 4th wave and it was A, B, and now we're finishing a C, maybe, or we did today. So it's still kind of up in the air, but I'm okay with it as a minute wave A, and that we're still working out this B wave. And if that's the case inside of it, it would be A of B, A of B of B, B of B of B, C of B, and then we come back up. So it would be A, B, and then a C wave up to finish that minute wave B. So all of these still are still playable. This is the outlier right now. And the market kind of did move up and slightly right there at before the market opened. We reached a high at 5534.50. And so the high last Thursday was 5533.25. So again, just like we did here, we did the exact same thing here. So that's what this all could just be a big old flat. Now from here, we did the A, B, C, B, C, done, 4, boom. It has that feel to it as well. Let me just do that again. One big flat. There's the A of B, B of B, C of B back down to here, going just past that trend line, which now you see. And this trend line goes from, was brought to me by a member of the trade room this morning. And I have to think, it's like, I think we're connecting back from the 2020, October of 2022. Forgive me, 2023, excuse me. It's going to be October of 2023. So all the way down here at this low, the low of the minor wave 2. And we're just connecting. Nope, I'm wrong. It's going to be over here for the minute wave 2. So it's going to be the October 2023 low. And this is actually off just by an also little bit because of the contract change when I get off of the weekly chart. So I'm going to leave it where it is, even though I should draw it down to here. If I do, then as soon as I drop back down to the, let's just say the daily chart, you see where it comes down to, right where it should be. So that's the contract, the September 24 contract. But if I move it back out to that weekly chart, still the September 24 contract, but September contract at that time was up here. This was a different month. And there it sits. So we get a little bit of difference there, but no big deal. So, but still, from the October 2023 low, basis September contract, we connect it to that low that we made there at, I think, Friday. And they touch. And it's just a nice trend line going all the way up. So I'm kind of going to leave it there. But let me just say, again, if we come back in, and it's one big, and the whole B wave, right? So the entire minute B turns into one big ass flat, excuse my language. A, B, C, B, and then a C wave back up, and it never really gets out of the box. And we got a lot going on that could draw it out of the box. So this is kind of getting really crazy, but I want to leave it there for right now. If we're just going to talk about a point of risk on, risk off in trading, that's at 5,500 in the SPX. And so in the ES, I believe, let me just kind of look at this. The premium for the close right now, we're up $1, so we closed at 55.03, and the SPX closed at 55.63, so it's about 50 points. So 54.50, and look where this line kind of comes in down here. If we're looking at it, it's coming in at 54. It's not, it's weird because this is 54.50. So about 47 to 50. So here it's can stay in this box because of that strike of 54.50 is that point. It's an inflection point between where it becomes risk off trade or risk on trade, and the risk on trade propels the market higher. So in order for the market to really pick up a rally again, it really needs to move back above 5,500, trigger what it needs to trigger that's going to feed that type of a rally. Likely then we're going to see selling of the VIX. So they come in and they sell the VIX, and they take that cash and they stuff it into Apple, AMAT, AMD, the Mag 7, the Mag whomever, and it goes in there and the market just self-fulfills and rallies. So we need that type of a rally, even in the B wave, but if it only gets very contained, then we're going to rally, drop. So it's going to be back and forth. And the feeling is due to the fact of we're at that inflection point. We're at that level that it's either going to fly or it's going to drop. And so what is filled in and in between when we saw this massive buildup of calls, then we did this drop. And this was a fairly intensive drop, folks. And so, and that, a lot of adjusting has taken place. So now below 5,500, the puts kick in. Above 5,500, the calls kick in. So it's selling calls and buying the underlying. And down below it, you're having to buy or sell the puts and sell. So again, it gets weird. Now, what I'm thinking is we're sitting in between. I've run it so that if we do, we're going to have to move this over the 4 and then the 5, and we come back down, that move is likely going to take us below 5,400, which again is not serious, but it does provide 5,400 should be moderate support. Again, put wallish type support, gamma type support, and a drop below that may not trigger what we think, because just below there we have 1.618 fib support at 53.88 in the ES. So 5,400 is more important in the SPX, and here it would be plus about $50, so 54.50. So we're still sitting here. So if it starts to break there, we run the risk of having a quick flip back down to 53.88. That would kind of maybe tip the SPX in the same way at 5,400, but it's not as strong. So let me just say this again, that the stronger, please do not break support is at 5,300. That would cause some havoc and likely send the S&P into a little bit of a downspin down to 5,000. So that's kind of the breakdown in terms of the way that some of the options are trading and what that flow is suggesting and how those numbers are lining up. So right now we're in between. We're in between it all because we need to get above in the ES, we need to get above 55.50. And so if we're far enough above 5,500, it should be easy enough to start breaking out above all of this. But until we get there and we start to click and we start to see everything kind of click and go, then I think these levels can be broken. And then we're looking at a B wave. So in the meantime, what do we got? A, B, C. So I think the C wave is going to come in flat. And it may do that tomorrow. We could come all the way down and give this a look. 54.45, 54.43, 54. Whatever that, I got that point at 54.43. And it actually belongs a little bit lower, if I might say so. Let me just reset this. No, because it's not that way. Sorry. I was going to move the 100%. I thought it should be down here, but it's not. It is a fib for 1 to 5. So I'm going to leave it there. If it breaks and we're in a C, but I don't think it will because I'm going to tell you why. A, B, C, then C. But if this all gets moved like I said, and it's A, B, C, and the 4 comes over here and we start to drop, and we break below that, then 53.88. After 54.43, if that doesn't hold, and we're going to look like we're going to break below 54.32, then a quick trip to 53.88 is very likely. But I think we bounce off of that, to be honest with you. I don't think it's taking us into the next step because this is not complete. The 4 is not complete. The B is not complete. So we have more to do here. And I think we stay in a box. We either finish it to the upside and call wave B, or we drop back down and it's part of 4 and the 5 of the A. And then we do it again. So we got those 2 plays are out there still. And we got to give each one equal weight because guess what? We're still sitting in the box. All right, so that's the S&P. Let's go over and take a look at the NASDAQ. NASDAQ pretty much gave us the exact same picture, went up and not quite moved to that high this morning. That high being 19,390, and I needed it to get above there. And it didn't. It got to 77 before it took a nosedive, came back, and then took a slight nosedive and finished for the day. And now kind of just trading or treading water. Up a little bit, treading water. So what do we do with all of this? It's exactly the same thing that's going on here that is happening over in the S&P. We're still forming, or I think we may have formed, minute wave A, but we still run the alternate, which would say, well, we put the 4 over here. So we have 3 down to here, A, B, C, slight failure. And now we're coming back down to finish wave 5. And that would suggest that we're going to break both of these. And then we've got 1.618 at 18,741. And I think it could be very fast. It could just be like boom. But then boom. And why? Because then the 5, and we're going to put the A over here, and we're going to do an ABC up. And we're going to change the levels, not by much, but we're still going to be looking for a move back up into this area. And another ABC to put in wave 4, minor, excuse me, to put in the A wave and then put in the B wave of minor 4. And then we come back down. So I still think that we have some major downside in the way of an additional larger leg, like similar to the one we just finished. We've talked about it. And it still exists. So if even if we're just looking at this, this is wave A, then we get a B, then we're going to come down in a C, and that's going to take us inside this box and hopefully towards the bottom side of it. As soon as I can get a B wave in, folks, I will run fibs. And if we get up to here or here, you're pretty much looking like it will. It should get closer to here, and it can go very fast. And then we're done with minor 4, and we begin to rally again. So we're always going to be dealing with, by the way, in terms of inflection points, in terms of risk on, risk off trades, that's going to stay in flux and stay in play for a while. Because we have those levels, we have levels like that in the Qs, and where they closed, 465 is a level, 460 is a level. Down below, we have a level, and they tend to kind of group together in the Qs, which gives us our clues on a lot what's happening with the NASDAQ. They don't balance out equally because this one's trading at 19,000, and this is trading at 463, 464. So again, you're like, how does that work? I'm not going to go into it. In the meantime, I have no real changes to make. We still are running in the same thing. I only want a 20. Do that one. And we're going to go here, and we're going to take a look at here. Same deal. If we are looking at that and we kind of come in, we have to move the 4. So right now, the 4 is here, 3, 4, 5. A, B, or A of B, B of B. We're going to do a C of B, which kind of does project like it could get itself back down towards, let's just take a peek. If today did finish, hold on, before it gets really ugly and nasty, I've got to get rid of this one because there are just going to be too many numbers. So now I can put it in. And let's go look at it as if this is the A and the B and the C. A, B, and we're now looking for C of wave B, the internal B. And then we do a C wave up. A, B, and we're coming down in the C, 100%, 18,927. 1.618, 18,650. So we still have that potential to drop and break below that low and that low. And if you just think about it for a second, I had run other fibs, and they're basically in the same area. So now they're just out here, coming off here. And I could be 1, 2, and here we are again. Same deal we had. Is it 1, 2, 1, 2? Is it going to be a flat? It's like whatever. Now, if this stays in, and this is A and this is B, and this is wave 1 of C, as bizarre as this whole pattern is, we do a little bit of a wave 2 of C, and then we run again, our numbers still are valid, right? We still have 382, which is 19,378. We got pretty close to it today. But the ones that matter are 0.382, which is 19,685, 50%, 19,933, and then outside 62% at 20,181. That I'm not necessarily looking for, but it is not out of the realm of reality. And what I mean by that is like I have no idea. I have no idea. I'm probably going to do a little bit longer of an update because now I want to go quickly. Because speaking of the NASDAQ, I did work up Apple. And I can take Apple all the way out to my maximum chart because I've been keeping it up there for a while. And so right now, off of the lows, so this would be the lows from 1997. The market launched in another, what I consider a primary degree rally. So we have primary 1 and primary 2, and so we're inside a primary 3rd wave. And right now, it's kind of like the NASDAQ itself, because in its current rally, which is a 5th wave, where we have intermediate 1 and 2, minor 1 and 2. But here we're a little bit different because we have intermediate 1 and 2, and we have minor 1, 2, 3, and 4, putting us in minor wave 5, which will take us to new additional all-time highs before it completes. And I'm going to start to move it down. So I look at a 3-week, and then what does that do? There's the 3. There's the 4. We're in a minor 5th wave. Minute 1, minute 2. At first I'd run it here, and it goes, and both are acceptable actually. I could put the 1 here, and this is a more complex wave 2. But we're still in this minute wave 3. Complete. Now we're putting in minute wave 4. That's on the weekly. I'm going to bring it down real quick. Inside Apple, there's that 3. Looking for the 4. What do we got? Well, we have an A, B, and 1, 2, 3. A little bit of a triangle going on here. For a wave 4, we come down in a 5, maybe down to 209. If I need this to go down and up one more time and then thrust lower. I think you could probably run it if I needed to. This is all just, this is a guesstimate, okay? Guesstimate, because I got no clues, to tell you the truth. And so you're looking at 1.618. Yeah, 214, 211. If it's going to come down a 3 and the 4 and the 5, and I'm going to compare the 5 to the end of this, but that doesn't work. So I'm going to take that off. I think that we could come down as low as 209 if I'm using this correctly. And that would be the correction for the wave 4, 0.382, most common. So right now we're 218, and what it drops to $9 more, and then maybe has great results or whatever, and we go, because I'm looking for it to kind of come quickly, right? If it's a little bit, A, B, C, D, E, it should go the other way. A, B, C, B, A, B, C, C, A, B, C, D, A, B, C, E, down, thrust out, and it should break below 214. Real quick, I got the 200 at 214, and then 209. Put in that, and then put in a C wave, and put in that minute 4, and then rally again. And that one should, or it really should, take it above 250. But again, that I think fits cleanly with the NASDAQ itself, putting in a minor 5. So I think these 4th waves are likely going to be tied to each other somehow. Maybe, you know, so again, I'm coming back here. I'm coming back to my hourly chart. I'm opening this up. I think we have more to do. Our choices are the same as that I presented in the S&P. It's either going to drop in A, B, C, B, and then we get a rally C to finish the minute B. These levels remain active. If this is not complete and the C wave goes full bore, then it still can be A, or we move the 4 over, A, B, C, 4. Got it? A, B, C, the 4 comes over here, and we start to drop down. Still going to use that support level down there, to be honest with you. I got this 216 out here on this 5. That's not valid anymore because I'm considering it done there, except if I move this over. Then this remains alive. So I leave this in because if I have to move this 4 over, and I'm still working a 5 wave down, well, there's some, and there's outside. So we have 18,650, 18,385. That's what sits down in there. Moving averages are really just kind of following it along. The 200 still heading lower, the 50. So the market continues to have that more of a negative tone, and that does fit risk on, risk off type trading. But again, I'm looking for that level in the S&P to kind of guide what also could happen in here because of Apple, the Mag 7, that will definitely jump into play. Artificial intelligence will be back on the front page. So again, let's see what happens. I'm not going to drag on this too much longer because it's likely already long enough. So our next update will be on Tuesday, July the 30th. Now, also what I want to say is this is the type of detail that I really want to move and to put into our trade room setting where people are coming in because we're going to trade it. And again, I just want to go over, it's like what I'm talking about here, folks, is a trade room of active traders. So these are people that maybe already are day trading and they just want to hone their skills, or they want to come in and follow along and do what we're doing in the NASDAQ. That would be great. And we're a teaching room. We share, I get detailed in the analysis, and also would not just do the NASDAQ, but would bring in the S&P on a stronger tone, definitely include a lot of the information about the flows. So that's what's going to be the trade room. And I'm going to be taking it away from here, but I'm including it right now because I'm wanting people to understand this is what I'm doing. And it takes that work to combine the Apple, to put that picture together, stick it into the NASDAQ, stick it into the other ones, add the flows in as well, and come up with what maybe is going to happen. All right, that's it. Have a great evening.